Welcome, everyone. Can everyone hear me okay? Okay, I'm going to put on my glasses here. I want to welcome you to the 7X Live. My name is Cordell Stevens, one of the co-founders of 7X. And tonight we're going to do a few things in here. We're going to talk about about accumulation and distribution in markets, and two, a little bit about tomorrow they're going to release the revised GDP and GDI, gross domestic income, and those numbers come out tomorrow. Those numbers should have significant meaning in the markets tomorrow. And then we're going to talk just a little bit more about interest rates, what we see for the future and why that is. We're going to go into a little bit about mortgage-backed securities and why those are mainly designed. That's really how we get the interest rates for home mortgages and so forth. We're going to show you what's going on there and why those rates have gone up so significantly. And then we're going to talk about 7X investors, some of the products we have in here, the cost of those products and so forth. But we want to give you pretty much a snapshot view of some of the things you'll be learning, but in much more detail in your mentorships. And so we believe in mentorship. We believe that when we are learning something new, we have two ways to go about it. We can go about it by, learning, fail, learning, fail, learning, fail, learning, fail. And that's a hard way to go. If you've ever started a business, which I've started several, it's that way. It's a really hard way to go. Whereas if you have someone there to show you the pitfalls and help you to avoid those pitfalls, the failures are less, but the learning curve is a lot greater. So when you have a mentorship, you have like an exponential learning curve, versus some of the failures that you're going to have. So that's really what we're looking for here. And in this program of 7X is to have a mentorship that can guide you through where you could hit those pitfalls and get yourself into real problems, cause you a lot of wasted time, a lot of wasted money. It's the same way in business. So we're going to talk a little bit more about that at the end and some of the mentorship programs we offer in here. So with that being said, let's go ahead and get rolling here. I want to welcome everyone. I've got a lot of stuff going, so I can't really see everyone who's in the room. I apologize for that. I'm kind of in a position where I can't do that tonight because I'm running this show on my own tonight. But in the future, I'll have someone, I'll be able to see all that. But whoever you are, congratulations. You can ask questions in the chat on the 7X platform. I will get that and I will be able to answer those questions. So as I'm talking here, feel free to type in your questions and I will answer them, okay? So we don't have too many people in here tonight, so it's going to be real easy to do. And probably as we go along, more people will be joining us. But great to have everyone that's here. And let's get learning. So the first thing we're going to talk about tonight is what is called accumulation and distribution in markets. I will tell you this, if you recognize accumulation when it's happening, and then you recognize when distribution is happening, you have 50% of the learning done. It's really hard to understand or get that habit down, but over time, especially with someone who's been there and knows what's going on, they can show you how to do that. We're looking at gold tonight, and this is a 15-minute chart on gold. So we're looking at gold tonight, and I'm going to do this because I want to show you in detail some of the things that we're working, that you'd be looking at in accumulation distribution. First of all, we're going to point out accumulation. Now, accumulation is when a market is accumulating, okay? That means they're accumulating what? Money to make a bigger move. And the way they do that is by getting your money. And what they do is they take that money and they use it, and let me X out of this. I don't need this trade in here. They get that and they use it to make a bigger move, and that's called distribution. So accumulation is what people call ranges. Now, if you know anything about markets, most of the time markets range, okay? Probably anywhere between 70 and 80% of the time, a market is going to be in some sort of range, whether it's a small range or a very large range, it's going to be in a range. And so we need to learn, first of all, how to recognize those ranges. Tonight, we're just going to talk about how we would trade a distribution move, not how we would trade an accumulative move, okay? But there are ways you can trade an accumulative move if you recognize the move. So first of all, we're going to start with accumulation. Let's point out accumulation. This is accumulation right here. And we get this here, and we will block this out, and you can see that right there is the accumulation move. Bring it down here and move it up. Not sure why this is being so bad. Let me try this again. One more time here. We'll use this one here. This will be better. Okay, that's accumulation. Now you can see in this move, there's a defined top and there's a defined bottom. So here's the bottom of this move, and here's the top of this move. Now, why is that so important? When we break one of those defined tops or bottoms, that could be the beginning of a distribution move. And that's the one point I want to teach here tonight, is how we recognize that. It comes with a caveat. Sometimes they will fake a breakout and then move it the other direction. The markets generally do that, because what they want to do is they want to accumulate as much money as they can to make the final move, or the direction they want to go in, happen. So that's what we're going to see here. So we see that this defined bottom and top here. And what happens over here? We have a breakout. Okay. So you see this candle here. We're going to zero in here more because it's getting where we're going to make a move here. You see this candle, it closes solid below this range here. The range is here to here. It closes solid. That generally is speaking to you saying, hey, this is getting ready to make a move. Time to get into a trade. So a lot of people will enter here, get into a trade here because we got a firm, solid close below the accumulation zone. And that generally means we're going to continue to the downside like so, okay? But that is not always the case. And what changes that is once you come back into the accumulation zone. So you see how this candle comes back into it. That tells you they're going to go the other way. So you get out of that trade that you're in here and you get in the other way. And you start riding that up. As you can see, this one takes off. We're going to talk more about that. But like I said, sometimes when we break out of an accumulation zone, it's called a fake out. And that's because they need to get your money to push it the other way. And so that's what we're looking at here. We're looking at a fake out that just happened, and they're pushing it to go the other way. This is why it's so important to be nimble in markets, not to have a predefined bias, but really have a possible direction and then see if everything starts going in your favor in that direction. So if you enter into a trade at this line right here, let me just change my things here so I can do a little better job here. So if you have a predefined where you enter in at a solid close and you get in here and you see that it closes solid, this candle right here in the accumulation zone, again, you know to get out of that trade. You don't waste any more money or time staying in that position, because now the risk is too high for this trade to be correct. A lot of people, they will begin to add to their trade here because they'll see these two little candles come down. They'll think, oh, it's going to go back down and go in my favor. No, you have hit a point of risk that is, I would say, not tolerable in this situation. It's too risky, and I need to exit the trade. Now, because I've been trading for quite some time, I would get on the other side of this and take off to the upside. But most people want to wait for a confirmation. What do they want to wait for a confirmation of? A breakout of this area or this accumulation height here. And that's fine. There's no problems with that. So you push this over further to here, and now you're looking more so at entry here, or maybe you even wait till here. This solid break or solid candle, or maybe even to here, you're waiting for an entry to that. That's fine. You just got to understand that you don't want anything to come back into this accumulation zone. And so if you went ahead and let's say you took a trade right here on this candle right here, or this candle right here, then you would have to go through another phase of accumulation. And so this is what I'm talking about. Sometimes we have to have a lot of patience in markets. So let's go ahead and mark that here. And that's a phase of accumulation here. So right in there. And then that is confirmed by this solid breakout here. And then we have a continuation to the upside. Okay. And that's our trade. If you waited for this, that would be your trade on this bar right here. But again, I would be in this and I would look at this. My stop would be back into the accumulation zone if that happened. That's a pretty good trade there. If you measure that move there, and if you got into this level right here, you've got a pretty good trade up in this, and we would teach you how to get out of this. But that's quite a few pips right there. Pretty significant move there. Quite a lot of money there. So that's why we teach you to recognize these accumulation distribution. So now I've taught you accumulation. I've alluded to a distribution phase. This is the distribution phase here. It's more vertical. Accumulation's more horizontal. It takes longer. Now, how do people get destroyed in markets? And this is how it happens. In an accumulation zone, they think that, oh, it's going to go long. They get back in long, they get stopped out. Then it starts to go short, so they get in short, and then they get stopped out when it comes back, and they don't recognize what's happening. They don't recognize that what they're in is an accumulation zone or a range. Okay, you hear it referred to as range, and they're in this range zone, and they don't understand what they're in, so they continue to get stopped out. So if you've ever known people, they'll print, oh, look at all this money I made. And in this accumulation zone, because they caught a distribution zone in this accumulation, they'll lose all that money they just made. And they can't ever get on top. They can't ever make profit trading markets. Well, this is one of the ways that you make profit, is by recognizing these accumulation zones. So how do you do that? How do you recognize when you're in accumulation zone? Well, it has a lot to do with fibs, and I'm not going to teach fibs here tonight, but some of the ways you do it is recognizing where the fib levels are at. Because once a fib, what we call a fib extension, is reached, then generally speaking, an accumulation level is going to start. And that's where we look for those accumulations. And the way we recognize them is if we have something like this. So if I'm reaching, let's just say this is a fib level right here, and I reach that, and all of a sudden it starts to pull back, and then it starts to pull back down, and then it starts to pull back up again. Okay. That's telling me, okay, so this is kind of a floor here, right here. We see it breaches it, but it doesn't hold below it here. It comes back up on this candle and comes up and makes a new high, which matches this, or actually this is not closed a new high, but it peaks a new high, but it closes and it doesn't go above this closed high right over here. That's the zone so far. This right down here, which we talked about earlier, to this, those highs and lows, that's the range. Now I have my range. Anything that breaks those two extremes in the range, I would consider a possible trade. And so when I come over here and I see, maybe I take it on this candle because we have some body out of the range that's closing solid, or maybe I wait for this candle because I got a really solid close here, I would put my trade in there. Once I had a solid body back into the range, I would realize that I had a problem, and I would take that trade off, probably right in that zone right there, and take a loss on that trade. Once I exited this trade with a solid body right here, candle, and I'll put this so you can see it a little bit better. A solid body, either this one, or this one, any one of those three, I would say it looks now like we're going long, and I would put in my trade there with a stop loss within inside this body again, just in case it came back in and went down to the bottom. That would make a new high here. Let me just mark that, a new high here and a new low here. That's your new range. Okay. But in this case, it did not do that. It continued. We had this little range here that went in, then it broke out of that, kind of like a stepping, like stairs, broke out of that, had a distribution. Then it went back into another range, and then it distributed there. That's how I would mostly, in a general sense, recognize the range forming and then the breakout of the range happening, getting ready to go into a distribution. Now, distribution modes don't always go straight up. They generally go up, range, up, and range, and then up. Okay. They don't go straight up. Sometimes they do. That happens. We really like it when that happens because it really makes it easy for trading, and it makes it easy for staying in. But generally it doesn't happen. So we're going to move gold over here, and we're going to show you some pretty crazy moves. Okay. So you see, we had a pretty big, pretty big distribution zone right here after a very long accumulation zone. So if I was to mark that out, it would start about right here and go for quite some time. Okay. Sometimes they do that. And then we had a sharp move back down. Sometimes you get accumulation up at the tops and it gives you time to prepare for the breakout. This one did not do that. It went pretty much straight up and straight down. And so we had kind of like a mountain peak there. And you may not have caught that because of that reason. However, if we squeeze this up, you can see another accumulation zone. I'm going to point this out because it might be a little hard to see it, but it's right in here. That's it right there. And this one's a little difficult because it just goes up, down, back up, and crashes, okay? So this is something I'm going to talk about here, accumulation zones like this. So one of the things that we look for is we sometimes draw channels to identify what the accumulation zone is, and that's fine. So if we draw a small channel here, we would see this right here in this up move. So this is and we're going to bring this up a little bit more. This is actually a channel range or a channel accumulation. So some accumulations go like this. They go straight across like that. Some go up like this in channels, and some go down in channels. They're all accumulation zones. This one happens to be an up channel that's accumulating. Okay. Now, what's significant, you trade it the same way as you do a flat channel or a flat range, is once you get a break, a solid candle break or body of a candle outside of that range, you can go ahead and take either a short in this case, or if it broke to the top side, a long in that case. And so that's what you're seeing here. You're seeing that channel. This right here would be the candle that we would probably take that trade on right there. That candle right there. And then our stop for this candle, obviously, you could put it right here if you wanted to do that. And you see that this, once this accumulation was done, it is distributed, and it distributed down in this zone. So you have this low right here that you have to consider. And this low came in, it broke back down, came back into that, but then it failed again. Now, in this accumulation zone, this candle right here would be not very good there. That would be the candle you get. So you would be going short right about there. And that would be another distribution zone right there. Okay. And that's what you're looking for, is accumulation distribution. So that is really important to recognize these when trading. If you can recognize these, whether it's a straight channel, an uptrend channel, or a downtrend channel, if you can recognize these, then you can trade them, and you can get in on these distribution moves, which are some of the largest, most profitable moves in the market. We call those moves momentum. And momentum is the place where you want to be, because momentum has what we call juice, or it has either sellers in this case behind it, or buyers in this case over here. So it has a lot of sellers, a lot of buyers. In futures, they call it delta volume, whatever you want to call it. It's got a big push behind it. And that's why you want to be in it, because when you're in those moves, that's where you make your most money. They are the most secure trades, and they're the best ones to take. Your skill set, as it develops over years, you can trade these ranges. They're not as profitable, and you have to be really on the ball to trade those. Okay. But if you can learn where you're at and just take an understanding of where the ranges are at, and say, okay, I don't really choose to trade in the range. I'm going to wait for the breakout. I'm just going to watch for the breakout. And you might have it far enough in where your seeing this range right here, and you just put an alert right here at this price level, which is about 1928. And then you can get that text to you on your phone from your TradingView account, and you can get onto your account, whatever you're trading, and you can get on there and say, okay, now it's time for me to go short this and put in a trade and put my stop in place. And once you learn the fib levels, you can put your targets in place, and then you can go ahead and trade that, and you don't have to be sitting at your computer 24/7. You can really halfway automate your trading. Okay, so that's the great thing about understanding that. So we learned tonight how to look at the distribution moves, how to trade those, and where to get in. In our classes, we teach you how to exit these places using fibs and so forth, and get you trained up and really develop good habits on getting out of those trades. Because there's two things that people always ask. Well, how do I know where to get into a trade at? And then once you're in the trade, well, how do I know where to take my profit at? And we generally teach you, when you're taking profit, to scale out of the profit. So you go to 1 point, scale out. You can put your stop at break even or into profit, or you can put trailing stops in. And then when it pulls out and you believe that's going to continue down, you can get the rest of that move with your second position, or how many positions you have on the trade. And so it's a great way to get every last drop out of a trade, if you want to look at it like that, that you can. And there's some other factors into knowing what you're trading, whether in this case, if it's gold, which would be governed by interest rates. If you know if those interest rates are going down or not, that's kind of the fundamental side of trading. But the technical side helps you realize, hey, I can go continue short in this move because of the fundamental side that's backing me up. So that's really, really important. And that gives you a lot of understanding of how to trade. Okay, so that pretty much concludes the session on accumulation and distribution tonight that we're going to be looking at. The next thing we're going to look at here is we want to look at what's going to be taking place tomorrow. And I'm going to just move another chart over here. That's really important. And we'll show you why it's important and why it has certain meaning in our trading. There are two types of things that are looked at when we're looking at, is there a recession or is there not a recession? And one of those is gross domestic income, that's called GDI. And the other is called gross domestic product, that's GDP. Now, everyone is more familiar with GDP than they are GDI, but both are very important. And I'm going to show you why here tonight. So when things are working correctly in an economy, meaning the economy is growing, it's strong, it's prosperous, we generally see that GDI is above GDP, because obviously it takes money to buy things. So if money is contracting in the consumer's bank account and they can't buy anything, GDP should follow, right? Because people aren't buying, obviously gross domestic product is going to contract, okay? And we see that here with the 2008 Great Recession, that we had a cross here, and that GDI began to go below GDP. And it took a while for GDP to come down, not too far, not too long, but it did. And then they met up again, okay? Well, what we have here now is we have gross domestic product here, and we have GDI way down here. And that is a really large spread, one of the largest we've seen in history, and where GDP is up here and GDI is way down here. That may change tomorrow because of the revision. Now, they do this once a year, and so we're going to be looking at the numbers for that revision. If the revision comes in lower, meaning that GDP comes in lower and GDI comes in lower, that could signal that the economy is in a recession. And so this is going to be looked at very carefully to see what the revised numbers are. And we've gone through most of the numbers that have come out this year, that everything has been revised lower. It hasn't been revised higher. It's generally been revised lower. We expect the same thing here. We expect gross domestic product to be revised lower. If that is the case, what will happen is markets will begin to go lower because it signals risk off. And when we trade, we look for either a risk on environment or a risk off environment, whether it's for that day, for that week, for that month. We're looking for it for that. Say we're a day trader, we're looking for that day. What am I getting involved in here? Is it a risk on, a risk, or risk off? And we teach people how to look at that. And so that's what we're looking for when it comes to the revision here. Is it going to tell us that the markets are going to go risk on, or are they going to go risk off? And so that's what we're looking for. Again, another thing that we look at right now, because it's very important, is we're looking at mortgages. We're looking at the housing market. And why are mortgages at 7.6%? We got this. You can go to Mortgage News Daily and pick up these. You can go into the MBS section and look up MBS versus 30-year fix. And you see the chart down here in 2020 and 2021. Yes, we're looking about 3.17% interest rate. Whereas now we're looking for up here about 7.65. Well, why is that happening? And this is some of the things that we need to understand, because this also dictates whether we're working in a risk on or a risk off market. And so what the Fed did is, you heard quantitative easing, you heard that word thrown around a lot. And part of that was the Federal Reserve would buy up what's called MBSs, which stands for mortgage-backed securities. Well, when the Fed decided to stop QE and they decided to tighten and raise rates, they stopped buying mortgage-backed securities. And mortgage-backed securities are one of the mechanisms responsible for determining your rate that you're going to pay on your mortgage. When these stopped being purchased, the demand for them lessened for investors, because the Fed was buying a lot, and so demand was high. And so as the demand decreased, they have to raise the rate of the MBS, because they need to make it more attractive for investors to buy, or for investors to take that risk to buy those fixed assets. And so what happens is those rates go higher. As we can see here, the rates of the MBSs go higher. Okay. And back here, it's kind of hard. This is kind of crazy. And when those rates go higher on the MBSs, that affects the mortgage rates as well. And so when you have that effect of higher mortgage rates and you have less lending in the economy, what happens is the supply of dollars begins to shrink. And when supply of dollars begin to shrink, because it's created through lending, then what happens is that we have a contraction in the economy. And that is a risk-off scenario also. So we look at all these things when we come into markets, when we study, and when we look at where we're going to go next. And this is part of our programs that we offer people, to show them, help them understand the back end. So when you come into the market, you're not blind. You're expecting what kind of a day that will be. And that allows you to go short, say the NAS 100 or the S&P 500, or to go long it, or to go short, say a euro dollar, or to go long it on a currency. It helps you determine that risk on, risk off scenario, so that you can take that into consideration as you enter that day into your trading. And you can kind of predict the future. Very important when you trade, to be able to predict or look ahead. Okay. So I wanted to share those types of things with you so that you had a better understanding of how to trade markets. For example, as rates go up, gold goes down. That's one of the correlations of rates and gold. And so we can come into the market and we can look for every pullback. We can look for a short. So if we went out on the 1 hour chart here and we looked at gold, we see, if we scroll over here, we see that gold is dropping quite rapidly. And this would be a significant trade here to get involved in. We see now that's an accumulation zone, so not a lot of happening with gold here. But this was a significant drop. We could prepare for that drop if we understood that correlation I just showed you, and that mortgage rates were going higher and the Fed is expecting to keep rates high. We know that we can go short gold and we can make a lot of money that way. So every day we come into here, if we see a pullback like this or a pullback like this right here, we can get short on those pullbacks. So those accumulation phases you see right in there, those, when they break out, we can get short and we can take those down. And that's how we know to do that. Okay. That's the knowledge base. We know how to do that. Okay. So very, very important to understand what's happening in the background so you can trade the technicals. Wrapping up tonight, I want to share with you about our 7X programs. And the important thing is here is to come in and become a member. It's important because, first of all, you become part of a community when you sign up on a free account. That's going to give you support. Now, most of us live lives where we are constantly running. We're constantly trying to get things done. We're constantly behind the curve. I drove past McDonald's tonight and I saw a line, all the way around the building of McDonald's. And I thought, those are people who are going out. They're working 8 hours a day, 9 hours if they get an hour lunch. They're coming home. They got a family to feed. They don't have time to fix dinner, or they just don't have the energy to fix dinner. And they're standing in there getting bad food and going home, giving it to their kids and sitting and watching YouTube shorts all night because they just can't deal with the stress of things anymore. And I was thinking, what a crappy way to live, I mean, there are better ways out there to earn money than to have to slave labor your life away. In 7X Investors, we address this. And how do we address it? We address it in two ways. We have the first stage. That's where we teach you how to become a profitable trader. Now, with those profits, you can invest, which is the second way. You can invest in asset classes that give you a return without you having to be there. So when we come in and trade, we have to be there on the chart to trade and to learn things and make sure our trades go in and they get taken out. That's our job. And we do it day in and day out because we love doing it. And you eventually take that money after you have accumulated quite a bit, and you take it and you invest it in assets that are going to give you a return, whether that's real estate or other things that's down the road. But our first concern is making sure that you start making money, maybe starting out on a part-time basis because you're working a full-time job. But we want you to start learning how to trade the markets through analysis, simple analysis that you can understand, that you can start right away and start making money right away. So we want to teach you how to do that. The next step is, as you accumulate your accounts and your account grow, you can use some of that money to support yourself, but save a lot of it to make longer term investments in yourself and your family, if you have a family. So this is how our mindset is in 7X Investors. The first thing we want to do is we want to bring you in as a free member of the community so you can see the type of support that is there for you. Meaning that if you come into the community and you have questions or you have problems and you need answers to those problems, you can post that and we can help you through that process. So we want to develop a trust with you in the community so that you know that we're here for real. We're here for the long haul. And 7X just celebrated its 5-year anniversary today. And we're here for the long haul to help you to become successful. And we do that through a community. Now, within that community, we have several offers that we have. So you sign up as a free member, you're going to go into a dashboard like this. And over here, you're going to see this little symbol here. And that's going to allow you to come in and go to our community. And once you're in that community, you see over here, you see a large list of things here. You see the community for 7X, that's all in this kind of blue hue. And 7X member chat, share your wins, ask questions, recorded trainings for, these are recorded, so they're there, so you can access them. This is live training registration, live training schedule, and this is the weekly look ahead. That's where I do a video that kind of shows what we're looking forward to this week, what we believe is going to happen in the markets. So all of that's there for free that you can take advantage of. Once you decide where you want to land, meaning if you want to land in futures or if you want to land in trading Forex, we have 2 programs to address that with some really great mentors. In Alpha Trader, there's me and there's Ty. We teach Alpha Trader and we create Alpha Traders. We teach things like how to develop habits. So when we go in for a mind for trading, we teach you how to develop your mind for trading. We also do live trainings where we show you what we trade live so that you can see it in real action. It's different when you teach it and then you go out there and actually do it, because you need to keep everything in check. You make sure that you're following things like you developed your habits before to apply in the real markets. So we teach you that in live trainings. And so we teach you how to trade Forex and CFDs. Next, we have 7X futures. Now this is done by Dan Kelly. Futures are kind of like the heroin of trading, is what I say, meaning that it's fast, it's very profitable, and it's really quick. It's I don't know, it's the difference between I don't know, a donkey and a cheetah, or a turtle and a hare. They move really fast, and so you really have to tame that tiger. Dan Kelly has probably one of the best future traders out there to show you how to do that and how to go in there and to be a profitable trader, take these small wins to multiple accounts, which add up to a lot each day, and be able to do that day in and day out. And the results are really great. So if you just look in here, for some of the results, we go into share your wins, and you can kind of see some of the wins in there that happen. So pretty nice, pretty significant. People making good money in there. Again, Alpha Trader, we also post, so you can see some of our wins in there as well. But this is part of trading futures. Then we have London Breakout. Now, London Breakout is it's a different animal. It's for those who really are looking to. They don't have a lot of time to trade the markets. It's more of a signal service, and that's ran by Sean Baldwin, and he comes in each night or morning, depending on where you live, and he gives you a trade setup for the London Open. And so he shows you his setup for that. You just put that on your charts. You go back to bed, or you get up for the day wherever you live at. It happens around 4 a.m. Eastern Standard Time. So that's the London Breakout, and he posts all his signals in there, and you just put those on your chart and let it rip. For the first 2, Alpha Trader, there is yearly and monthly, and the monthly is $249 a month, and futures is $249 a month. And then for London Breakout is $89 a month, and those are the costs for each one of those. Now, a lot of people say we were thinking ways, how can we make this as affordable as possible for people? And the way we did that is we decided to do what's called a partner program. What a partner program is, it's an affiliate program. So what can we do to help people? Well, if they share this with 3 other people, and those people sign up, you pretty much have covered the cost of mentorship each month, okay? Because we pay those commissions to you each month. So we pay 35%. And in this case, if you brought in someone, say through futures, you would be getting just over $87 a month, each month, as long as those people stayed active and paid their tuition costs each month. And so that's a way that you could afford your mentorship. And we've put that together. That's been put together by Keith Stevens. He's done an excellent job at it. It's still being put together more. We're going to have a plug and play advertising where you just plug in and can advertise your product. Are these products in here? And you get those commissions off of it. So that is even still developing, getting better and better as each day goes by. But that is a way that you can afford Alpha Trader, futures, 7X futures, or London Breakout. And is by just sharing it with a few people. They come in and you cover those costs. Pretty significant. So if there's any questions, I don't see any questions on the chart right now in the ask, but does anyone have any questions before we wrap this up tonight? We usually leave about 15 minutes for questions. Okay, well, no questions. We'll go ahead and wrap it up here. I hope this was very informative for you. I hope you got a technical view of how charts work, but also a little bit of the fundamental view that we teach how markets work and how you can be able to understand what's happening in markets and be able to go in and trade that. Pretty significant, pretty exciting stuff. You come in with us each day, you work with us. We'll get this down for you. We'll help you develop the habits you need to stay consistent in trading. And this concludes. Again, go to www.7xinvestors.com right up here and come in. You just hit create account and that'll take you to a place where you just put in your information and you create account, and that will get you into the door. They'll get you into, and then you go through those phases here. Once you come in, I'll just take you back through it. And once you come in here, you're going to create your 7X investor account. You're going to start here. You're going to go through the videos, and each one of these videos will teach you the process to get signed up into the community. So pretty informative. It's all laid out for you. It's real simple, short videos, and come into the community and start learning how to trade, start learning this craft, start learning the business of trading. We're excited to have you in here. We hope to see you in to our community. And once you get there, we'll get to know you, address your issues, and help you on your journey. Take care. And this completes this week's live training. We'll talk to you later.